What's happening, everybody? How y'all doing? What's going on? I haven't talked to y'all in forever. I think the last time I shot a live video was probably about 8 days ago. That's a long time for me. So, first of all, how you guys doing? And second of all, I'm honestly coming with some good resources for you guys today. And just kind of recently in the past, I guess 2 weeks or a week or so, as you guys know, I got to fly out and meet my good business partner, Kawan Mayo, and we were able to enjoy our the fruits of our labor for building such a large, profitable team and showing people how to stop inflationary things that are happening. So we protected a lot of people against inflation, and how we did that, you can actually come to our presentation on Tuesday and Thursday and find out how we protected people from the inflation or those who will follow us. So we did that and packed in a large team. And so let me see. Here is my man, Daniel. Hey there, brother. I'm also glad you're back from your trip. Yep, I'm back, Daniel. Back better than ever. And so what I wanted to do is I actually wanted to take some time in here to give you guys some really good content and some really good resources that you can use for yourself. Now, a lot of people that are watching this, you may have invested into cryptocurrency. You may have invested into a cryptocurrency program. You may have invested into anything, and you may have seen in the last 2 weeks that crypto has actually taken a nosedive, such as Bitcoin, such as Ethereum, and that happens in crypto. But crypto never ever really just goes straight up. Any investment you make never goes straight up. It always has a pattern that forms like a step. It goes like up, then it's down. If most of you don't remember, when Bitcoin first came out, it went up to like $300. Then it went down to like 90. So it always does that. So myself personally, I'm actually in the green when it comes down to all cryptocurrency because, I've been investing into it for a while. But for those of you who are not in the green, I wanted to give you a really good strategy that is going to help you be able to mitigate loss. There is a tax loophole for anyone that invested into cryptocurrency. So, if you're thinking like, man, when I invest in something or when I join a business or when I invest into a crypto program or if I buy crypto, then I lose my money. Folks, honestly, I am not a tax. Let me say this. I am not a tax professional. I am not don't take my advice to, for any tax things, go see a tax professional. But basically, I'm going to give you something that pretty much is a way that you can actually never really lose money. And how many people know that when you invest into a business, when you invest into anything like that, if you are smart about it, you really reap that investment back. So I can honestly say I have never really lost money physically. So I'm going to kind of show you guys how I literally move through the tax system and use it for my advantage. I've always used the tax system for my advantage. And again, I'm going to show you guys how to do the same thing. So I don't invest, but I do hold for my crypto. So awesome. So let's kind of talk some strategy here. Did you know that if you buy crypto and you have a loss or you sell it for a loss or you take a loss, did you know that there's a tax loophole for anyone that invests in crypto? Now, let me tell you how this loophole works. It's really cool. Basically, crypto is treated as property. So as the IRS treated as property, when you invest in crypto and you take a loss, you can actually file that loss on your Schedule C. And what that does is the amount of money that you lost actually can be taken away from capital gains. So it's actually pretty much covered by the IRS. Let me draw this out because I know some people will say, man, what the heck are you talking about loss? And then even when you invest into a business, and most people forget to do it, and that's why I tell everyone you should have an LLC and you really want to be smart about mitigating your losses. The IRS will literally allow you to claim up to $3,000 in losses. So let me repeat that. The IRS will allow you to claim up to $3,000 in investment in crypto losses. And let me break this down for you how losses work in case you don't know. And again, I'm not a tax professional, but I do make some really smart tax moves. So let me just kind of flip my screen here and we're going to just draw out how this whole IRS loss thing works. So let me pull up my drawer here, pull out my trusty pen, and want to give you guys a little game here when it comes down to some crypto stuff. And let's share this here. Share screen. All right. Here's how a loss works. Okay. Let's say you have invested into a business. We're going to put your investment, let's put your investments here. And so let's say you put into, a program of cryptocurrency. Let's say you put in 2,500, right? So you put in 2,500, and let's say out of 2,500, you invested in Bitcoin. Out of the 2,500, let's say you have $500 left. So you have a net loss of $2,000. So here's what the IRS says. First of all, make sure you have an LLC. All right, make sure you guys at least have an LLC because you can actually get more tax breaks. So IRS says this: if your LLC, let's say you made about $30K, and that we're going to use that as an example. I know people make way more than that. Let's say you made about $30K. If you had a loss in crypto of $2,000, right? Then here's what happens. That loss, instead of you being taxed on $30K, this is how write-off works. You're literally taxed on $28K. That's what you're taxed on, right? So anytime you have investments in business, equipment, that's why I say make sure you have an LLC. Now, again, if you're a sole proprietor, you can't claim as many things, but make sure you have an LLC. Anytime you have a loss, and let's say you invested another, let's say $500 into a business, to a MLM business, right? And you didn't net a profit, or you did net a profit. So anytime you have losses can be deducted from your total income. As a matter of fact, literally, if you know what you're doing in 2020 when you file your taxes, there's no reason. Well, let me not say this because I know IRS people may be watching, but let me just tell you what I've done. I physically have a profit, but in the eyes of the IRS, I don't, because if you have an LLC and you spend money on, business things or business investments or shoes or clothes, again, make sure you get your clothes branded, as a uniform, like I have my clothes here, or maybe using your clothes for business or videos. Then anytime you spend money, it comes off of your total income. That's why you can be like really, really awesome with taxes. So let me just kind of break this down from a standpoint of, I think, why everyone needs to have a business. First of all, here's why everyone should have a business. I'm going to go employee here. I'm going to go employee. All right. If all you are is an employee, then you should get a business. I'm going to go LLC. If you're an employee, right, you make, let me pull out my tax chart here. We're going to use, let's use 100K. We're going to use 100K. If you don't have an LLC on 100K, the tax rate on 100K is roughly about, looks like it's 22%. So you're taxed at a rate of 22%. I'm going to show you how you can claim your crypto losses if you're smart, regardless of how you're taxed. So let me just do some math here for those of you who are still watching, and you can actually start factoring this in when you file your taxes of any crypto that you lost last year or in the following year. So if you make 100K, you're going to have to pay like 22,000 in taxes off of 100K. That's what you got to pay. You got to pay that. Not to mention all the FICA, all the other stuff. So literally 40% of your money goes to taxes. So out of 100K, you probably really only take home 60K. And then out of that 60K, by the time you pay stuff that's not tax deductible, by the time you eat and everything, at the end of the 60K, you probably really only take home 30K to spend, because you got to account for your gas mileage, which you don't get deductions for, your clothes, your electric bill, everything like that. You don't get deductions for that. LLC, how it works is this. So you're paying what? 22K in taxes, right? And even if you invest in crypto, you make that crypto investment, it comes off of here. But reason why everyone should have a business or participate in a business is this reason right here. Let's say if I'm an LLC and I have a job. You can have a job and still be an LLC. So still get a LLC even if you have a job. Any losses you incur come off of here. So if I invest, let's say I invested 3K in crypto, and I invested, let's say another, 1,500 in business opportunities, right? And even though I might make money from it, all of this money comes off of here. So whatever you spend comes off. That's why do you think at the end of the year, most business owners are trying to spend as much as they can? They're trying to put money away, because every time you invest money or you spend money, you want to kind of get your uses out of it. Because one thing about being a business owner is we have an advantage that non-business owners don't have. And that advantage is, like, we get to deduct our lunches, we get to deduct our vacations, we get to deduct our equipment that we buy, our computers and everything, because we know how to strategically do that. So you guys are still having to pay out of pocket for that without having an LLC. And generally, us as people like us that do have LLCs, well, guess what? All of that stuff comes off. So if I make 100K, right? And let's say I spend on my lifestyle. Let's say I'm spending on my lifestyle, but I'm catering to business. If I spend 60K, or let's say this, I spend 80K on lifestyle, then literally the IRS recognizes me making only 20K. So I'm only going to pay taxes on 20K. So taxes on 20K is what? Roughly as 12%. And here's a cool thing. When you're a business owner, you still can buy, I'm still buying things that I normally buy. But if I got taxed on 20K, then I'm only paying roughly $2,400 in taxes. So if you're going to make an investment, so again, on 100K, I'm paying $2,400 in taxes, while you're paying 22K. So everyone really should have an LLC before they do anything. And then when you do any type of investments, like if you're going to join a crypto deal, or if you're going to invest in crypto, then, set up that account, but also make sure you're setting it up as an LLC. Or if you're setting it up as personal, then make sure you are withdrawing that money from your business and making a business investment, because that's going to give you more leeway to claim it. So everyone, no excuses, should have an LLC, and you just should have one. Honestly, I don't know why people don't, but everyone should have an LLC to gain tax advantages. So hopefully that illustration kind of helps you out a little bit. Stop sharing, and we can talk about this. So everybody, there's my homegirl. There's Mrs. Nitsa Rosario. This is my really cool business partner. Love working with her. She's actually shared with me some amazing crypto stuff. So we're going to do a whole little series together. But if you're watching this video today, if you're watching this video tomorrow, and you are interested or you are investing into different programs that make you money, and if you're investing into crypto, if you bought some crypto and you took a loss, make sure you have an LLC. And you can start that LLC. It doesn't take much to start an LLC. And this way, if you have any losses, like maybe you're, and here's my other buddy, Mrs. Isella. But let's say this. People say, man, I don't want to buy programs because it's going to cost me money. Does it really, really, really cost you money? Does it really cost you? Because think about this. Like, we have a platform called NowSite that we use. Now, let's say if you buy NowSite, which is a platform for business, that NowSite purchase is a tax deduction. So the government literally can pay for your NowSite. So how did they do that, Melvin? Well, basically, if I pay $444 $400 a year for something for my business in an LLC, then I deduct that from my income. So if you are doing this right, folks, and you have deductions, then you could literally, really, actually have little to no risk. Because what happens is the way that the tax system is set up, you really don't have risk. So if you're a crypto investor and people are teasing you, oh, your Bitcoin went down, oh, this, oh, that. Well, you know what? Who cares? Because cryptocurrencies are going to go up and down. As a matter of fact, let me show you what cryptocurrency literally does. And me personally, I'm not going to just spew out my earnings or whatever, but I mean, regardless of what happens, I purchased Bitcoin at a very low price back in 2017. I think I showed you guys that. So I'm already playing with, I'm playing with house money for the rest of my life. Let's just say that the amount of money I made off of cryptocurrency for my entire life, I'm always playing with house money. When it comes to Bitcoin or whatever, or when it comes to cryptocurrency or investing into Ethereum or whatever, I am always playing with house money because I made a great investment back in 2017. And that investment made me a lot of money. So I don't have to transfer, money into crypto. I already have more than enough money in crypto. And so all this stuff is pretty much house money for me. So one of the things that we do is, we show people how you can profit, but also we show people how to learn to mitigate risk. So when you invest money into a program, if you invest crypto into a program, and let's say it didn't work out, or let's say you got a loss, you can get that money back. You can claim that loss as pretty much as a capital loss. And that comes off of your total income. That comes off of your capital gains. How many people knew that you could do that? How many people knew that if you invested money into crypto and you had a loss, how many people know that you can actually claim that loss and not really lose up to $3,000? I'm going to see if I can pull this up on the internet for you guys just to validate my claims. I don't want to just be spewing stuff out here without I'm a documentation type of guy. Everyone knows that, and I don't like to just document stuff. But honestly, if you have friends that invest into programs or you have friends that invest into crypto, you can let them know, man, listen, if you start an LLC, and you can do this if you don't start an LLC, but an LLC makes it easier because you get so many tax loopholes. So, I mean, honestly, everybody who is doing business should have an LLC. Make a consulting company and sign up with these businesses using your LLC. Don't sign up using your personal, not all the time. I mean, use your LLC. And if you do use your personal, then make sure you can, comp it with your LLC. So again, I'm going to pull this up here. Let's see. IRS. I'll pull this up so you guys can look it up for yourself. I want to make sure I'm just giving you guys some really, really good stuff. Let me go to IRS website here. Okay, I'm going to go to irs.gov, and we're going to talk about this here. So, are you ready? Because I got to show you guys. I'm all about the truth. So, let's see. Yep, it's get an LLC. I mean, and which for what you're doing, definitely have an LLC. Oh, anything. I mean, you're welcome. Yeah, and Tammy's here too as well. So let me just show you guys this. I want us to make sure that in case people are teaching you like, oh, you're going to lose your money. Whatever. All right, let's go share the screen. Can everyone see this? All right. So frequently asked questions on virtual currency transactions. Hopefully you guys can see this. In 2014, the IRS issued a notice explaining that virtual currency is treated as property for federal income tax purposes and providing examples of how long-standing tax principle applications to transactions involving property applying to virtual currency. The frequently asked questions below expand upon examples providing on notice 2014-21 apply to those long-standing tax principles. So what is a virtual currency? How is virtual currency and federal income for tax purposes? What is cryptocurrency? So the IRS even mentions it here, and how to determine if I gain or lost short-term or capital gain or capital loss. So with all of this here, you can go to irs.gov yourself and you can look this up and show that what I'm talking about is true. Then anytime you are investing into cryptocurrency or virtual currency, you're not really losing your money. You are covered by the government. That's why you should have an LLC. You're literally covered by the government to a certain extent. It will tell you how much money that you can actually claim for a loss. And that money comes off your income, meaning that, are you ever really going to lose money? Are you ever really going to lose money? If you are smart and you claim it, you are not ever going to lose money when you invest. If you are a US citizen and you're investing in cryptocurrency and you take a loss, then you can claim that loss and that money comes off what you would generally have to pay. If you're going to pay taxes, guess what? You're going to pay whatever you lost is going to be less your income. So you really, in actuality, don't really lose money. Now, don't be crazy about it because I think the IRS does have a limit. I think the limit is like 3,000 or something like that. So, you want to keep it under that amount, which strategically, if I want to take a swing at something that's an investment, then I will do that as well. So it's how do I calculate my gain or loss when I exchange my virtual currency for other property? So everything right here on the IRS website shows you how to calculate this, how to go out, how to deal with cryptocurrency and everything. One of my cryptocurrencies went through a hard fork followed by an airdrop. I received new cryptocurrency. Do I have income? So it tells you right here, hard fork is followed, gain drop, you receive new cryptocurrency, you have taxable income in the taxable year you receive that cryptocurrency. So again, I already showed you in short how to deduct income. So when you make money off cryptocurrency, there's a way you can offset your gains. If you lose money on cryptocurrency, there's a way you can offset those gains. So hopefully that's shed a little light on you from the IRS. So does anybody have any questions? You can type them here. I will answer them. Nitsa, hello. What's up? What's up? What's up? And again, Nisa, that's something that we can use for what we're doing. Nisa's a good partner of mine. She's showing me some crypto stuff. But yeah, I mean, you can literally write off stuff. And they say, oh, that's my buddy Karen Grant. How you doing, Karen? She's in our gold and silver opportunity. And it says, so was it helpful to you guys? So honestly, let's just sit here and talk really. There really is no loss that you cannot retrieve. Because as a business owner, lesson here is if you be strategic about it, anytime you make an investment, you can actually claim that investment off of your taxes as a deduction. So when people say, am I going to lose any money? No, you're really not going to lose your money because the IRS pretty much has you covered. You'll lose your initial investment, but at the end of the year, you can get that right back. So is there really any risk? Think about it. Is there really any risk? Now, I think there is a limit. So be aware of the limit of your investments. I think limit is like 3K. So I stay within that IRS limit. So if something doesn't work out, because again, we're going to make mistakes. As human beings, everything we invest in is not going to hit 100%. We're going to have some things we invest in and it's going to be great. It's going to pay us a lot of money. We're going to have other things that we invest in that they don't do so well. That's why the IRS offers the asset and income protection within the laws. It is meant for business owners because we take risk. And by us taking risk, we provide more opportunity for people to, again, become a part of a business or a part of an opportunity. That really, IRS is really hell bent on, really serving business owners. What about keeping records of the losses? So you log into your crypto account, you should have if you're talking about cryptocurrency, if you log into your crypto account, you should have an accurate account. And honestly, I go to tax office all the time. I pretty much keep a Excel spreadsheet of everything I invest in. As a matter of fact, you can use a tool called TaxBot if you want to. Do I have a link to that? I'm not sure if I do. So there's a tool called TaxBot that records your mileage, that records your lunches. So here's what I deduct every single year. I deduct my clothes, this microphone. I don't worry about this. Yep. This microphone, all this equipment here is tax deductions. All this supercomputer stuff I have, all these clothes, cars. Oh my gosh. I mean, I am literally just enjoying this rule because again, I know that the more money I spend, the less taxes I pay, right? And so I offset it, if I make a lot of money, so I have to spend a lot of money. So whenever I can get into that category of being very even, and this is why business owners like myself, this is why somebody like myself, who let's say, if you compare what I pay in taxes, 7-figure earner, to what a waitress pays more taxes than I do. That's how the laws are set up. A waitress pays more taxes than I do. A person that earns 20 grand a year pays more in taxes than I would. Isn't that, how fair is that? So you have to learn how to use the tax system for yourself. So you go out, you get an LLC, and anytime you invest in something, if you are a person that just bought, like let's say if a lot of you are in NowSite, if you are in NowSite, yep, that's right, a waitress, and it's just that's crazy. It's insane, right? A waitress pays more in taxes than I do. Have you looked at the tax system? Let me see if I can. Let me show you this tax system here. I'll show you how that happens. I'll draw this out, and you're going to laugh because this year, a person that made, I got my tax sheet right here. I have to send these guys to you. I'll send this to you guys. So this year, a person that made, let's see, if you made $19,000, if you made $19,750 for the year, you're going to pay way more in taxes than I will this year. And then here's a crazy thing. If you are a person that made the type of money, your paycheck is taxed. Like you're not even getting all your money. They're withholding from you. Like every income or profit I get is never taxed. That's what's so cool about starting an LLC, because the money that I get, all of my money, I get it now. I get to enjoy it now. And I don't pay taxes to the end of the year, if I pay taxes at all. Because again, I've had businesses that were closed due to pandemic. And, in the eyes of the IRS, on paper, you could say I took a loss. In reality, I gained big time. So that's how the tax system works. Because I'll show you this. Let me just draw out a little something here. Well, I don't need to draw it out, but I'll just explain it. Let me draw it out. It just makes it better. I want to show you how a waitress that makes $19,000, because of the laws in this country, the laws are made by, you got to think, who makes these laws? Who makes the laws here? Who are lawmakers? Who do they support? Do they support workers? No. Lawmakers support businesses, constituents. The laws are made to protect business owners. They're made to protect corporations. As a matter of fact, that's why I have an S Corp, because an S Corp you zero out every year. So I have an S Corp and LLC. S Corp, basically you have to have at least, an S Corp is a little bit structured different. You have to have board members, which is just easy to do. I have board members too. But let me just kind of go into how I pay less than a waitress in taxes, and how you probably could too. So here we go. Again, I am not a tax professional, so don't book me for tax appointments here. Disa's like, that's insane. It is insane, Disa. So I'm going to share this again. I'm going to show you this. And so anyone that invests into programs, again, you really don't lose money. That's what I tell people. And they're like, oh, I do lose money. No, you get it back, but you just have to be strategic in how you get it back. So here we go. All right. I'm going to show you what I'm going to claim this year. So a waitress that made $19,000. Waitress that made $19,000 this year is going to pay, let's see, 12% tax rate. We're just going to say that a waitress that made $19,000 is roughly going to pay, let me estimate this here. You made $19,000. I'm going to show you how these tax laws work and give you guys some game. And why you should have an LLC. So they're going to roughly pay about, let's round this off to $2,300. So minus taxes, you'll have $2,300 that's taken away from you. Okay. Now, let's just say this year I made 1.5 million. All right. Made 1.5 million, right? Now, well, let's came from last year, 1.5 million. Now, out of the 1.5 million, let's say I went out and bought some cars, bought a building, bought some cool stuff. Out of the 1.5 million, let's say, including my lack of income from some buildings, from some places that I lost, my losses, let's say I had a loss of 1.6 million. Now, even though I spent this money on clothes, food, the same thing you're spending on here as a waitress, I have a negative loss of $100,000. So at the end of the day, what do I pay in taxes? The government literally will pretty much end up giving me some money. So out of 1.5 million, I would probably have anywhere from 80 to 75,000 in a tax return. So I have a tax return, and the waitress has to pay taxes. All I had to do was spend money and invest money. That's all I got to do. And then I couple that with any type of loss that I had, and the government's going to compensate me. That's how it works. And even if, let's go in a extreme situation. Even if I broke even and I spent this money, I pay zero in taxes. So, hey, that's how it works. And I can spend this money on food, cars. I can pay on mortgage, because how many people know that if you do business out of your house, or you do business in your home, part of your home is tax deductible. Your computers, tax deductible. Your cameras, tax deductibles. Your makeup, tax deductible. Your clothes, tax deductible. So how many people know that? How many people know that if you go out and you spend some money, make sure you have an LLC though, and make sure you claim it correctly with your tax professional. Make sure you got a good tax professional, because when you make your total income, you go into deduction mode. You start just taking off your deduction. So I'll talk about my Nisa. I'm going to talk about your Nisa. So, Nisa made a video, and she has to get clothes and makeup and things of that nature. And because she made that video and she used makeup to make a video that promotes a business, then her makeup that she used as tax deductible, the clothes that she used in the video, tax deductible. And you have to be strategic how you do it. You just can't go write everything up, but make sure you are strategically applying it and remembering it. So, clothes are tax deductible, Tammy. So if you're using your clothes for work, for a business, if you go get some clothes and use it for business, some people say it has to be branded, it has to be uniform. It does not have to be uniform. If you're getting clothes and you have to purchase those clothes to do business, like to make videos or to travel for business or whatever, then those clothes are tax deductible. And in certain cases, gifts can be tax deductible. You can buy gifts for people and make them tax deductible. So for instance, I bought this gift. This is what my boy down in, it's pretty cool. That's tax deductible. So all the stuff are tax deductible if you strategically do it right. So again, when you ask people about business and people say, man, I got to risk some money. Well, what are you risking? You get to take that investment that you put into your business and you get to deduct it from your income. So what really are your risks? The IRS knows that business owners are going to take risks. They know it. So that's why they make the tax system for business owners. As a matter of fact, let's go up here and let's talk about all deductions. I mean, I've done this video before. I want to do it again. So let's go IRS. We're going to go business expenses. I want to show you all the business expenses you can write off, you can deduct. Let me go to irs.gov. I want you guys to see this here. All right. What can I deduct? Tells you all the stuff right here you can deduct. Raw materials, freight, storage, labor costs, just so many things. Look at this. business startup costs. You see that? Business assets, improvements, personal versus business. I mean, you have to learn how to, make sure it's personal. Business use of your home, business use of your car, other types of business expenses, rent expense. You can deduct rent is the amount you pay to use of property that you don't own in general. You can deduct rent expenses only if the rent is for property use or trade in business. So if you're renting an apartment or whatever, you can do business in an apartment. You can work from home. So look at all this stuff. Insurance, you can deduct. You get 452 deductions. So there's a lot of stuff here. You go through this thing and you'll see it talks about, your corporations, closing their business, operating the business. The IRS has all this stuff on here. So you have to go through it and interpret it correctly. But yeah, I mean, business use of your car, it has it right here. Travel, entertainment, gift, car expenses, standard mileage. You can deduct mileage if you're driving for business. If you're flying for business, you can, it's pretty much, it's covered so extensively. So, I mean, it's so many things that you can use. So, this stuff is there. There's a trick about clothes. It can't look like something guy wear daily. Yeah, I mean, well, it can. Like, for instance, I brand all of my clothes. So, and as long as if you're purchasing clothes and you're using those clothes for business, you make sure you're recording and make sure you're in videos with them. So again, you can strategically do that. And then it's not like the IRS is going to come and audit you. You're too small of a fish. That's why you need to have an LLC. So you can literally, do some clothes and, you have to be, I think she's saying you have to be tricky. So sorry about typo guy. There's a trick about clothes. It can't look like something guy can wear daily. Typo guy. Oh, can't look like something that you wear daily. So yeah, I mean, there's a lot of cool advantages. And again, I'm not a tax professional, but you can be strategic about all this stuff. And so again, for those of you who invested into crypto and you say, oh man, I got a loss. Hey, I just showed you in this video how you can mitigate that loss and you not really lose anything. So for those of you that, if you want to take an investment and you want to invest into crypto or you want to invest into a crypto program, I mean, there is a way that you can mitigate how you do your money. Yep, branding process. So hopefully you guys learned something here. This is a little kind of thing I wanted to talk about and just let people be aware. And for those people who have seen these losses or seen crypto go down, or you've seen some things happening in cryptocurrencies, then the thing is, don't worry about it, because as you see here, there can be a capital loss and the government has you covered up to a certain amount. Let me say up to a certain amount. So don't go putting $1 million in something, because the government's not going to cover that. You have to be strategically and smart about that. But they cover up to a certain amount. This is amazing. Oh, thank you, Nisa. So again, hey, don't be scared to invest. I mean, you have a safety net if you do, and so if you see programs you want to get into, or if you see a business opportunity you want to jump into, and your main concern is, man, I don't want to lose my money. Well, you're not going to lose your money. You just have to be strategic about it. Basically, what you're going to do is you'll invest that money, and that money will be protected under the IRS, meaning that they won't give it back to you, but you can use it as a deduction from taxes that you're going to have to pay anyway. And in most cases, you'll find that your deductions, investing into a business and using it as a deduction off your taxable income, it's probably going to save you more money than anything else. Because I just showed you, if I put so much into a business, my deductions can lower the amount of taxes I have to pay. So if it comes into me paying $22,000 in taxes versus $2,400 in taxes, I'm going to deduct as much as I can to get to $2,400, because I'm saving myself over $22,000 in taxes, at $100,000 income. If I'm at $1 million income, probably even more. So you can use this stuff to save your money. So I don't want to hear anyone say, man, I'm in this business, I lost money. No, you just didn't claim your loss. No one really loses money. So that kills that argument right there. Awesome. All right. So it's Bezid. It says thank you forever. So yeah, folks, go out and do what you will with that information. Hopefully it helps someone out here. And you guys have a blessed day. And I'll see you in the next video. Peace.